You're watching the Mainstream Alternative.
Welcome to the Mainstream Alternative. I'm Gabe Sukenik, and for today's News Outside the Box, we bring you an exclusive interview with James Turk, founder of GoldMoney.com and consultant to GATA, the Gold Antitrust Action Committee. Mainstream Alternative discussed with Mr. Turk the recent disclosure of the Bank of International Settlements' 380-ton gold loan to private European banking institutions. The loan, which was initiated by the BIS in December of 2009, was reported by the Wall Street Journal and Financial Times, however with minimum details or analysis. James Turk shares his insights on BIS gold loans, government money versus free market money, and the future of the U.S. dollar. I guess the first question we really have to get to is this recent statement by the Bank of International Settlements about gold being leased to private commercial European banks. What are the thoughts on this? Why is this happening, and what does it mean for the gold and silver markets?
Well, unfortunately, the BIS really didn't provide a lot of details. Like most central bank announcements, they really don't get into the exact accounting of what actually happened here. So we don't really know whether the gold hit the market or not, but apparently it did hit the market. And it's consistent with the price action when the transaction was done back at the end of 2009 in December, when gold dropped at a period of time which was sort of counterintuitive, counter-seasonal, in a period of relatively good gold strength. You may remember that November gold made a new record high, and then it hit a brick wall in December. And apparently the brick wall was this gold coming into the market. But it just goes to show that gold has an important role to play. Central banks are scared stiff of a rising gold price because it's conveying information about national currencies that central banks would rather not hear, namely that they're doing a poor job managing the purchasing power of national currencies, and that's why gold is rising. So it's just an example of what we've seen all decade long, central banks shooting the messenger rather than letting the gold price move to levels which it would otherwise do in a free market unfettered by government intervention.
Yeah, absolutely. And there are news outlets all the way to the Financial Times that have been covering this, and online they've had some interesting commentary. The paper version doesn't seem to want to try and get in depth, but they ultimately come to the conclusion, or at least the possibility, that these markets are trying to be rigged. Maybe just explain what it is that dumping extra commodity or extra physical metal onto the market, how does that help keep the price down, and at what point does how can they continue to keep pouring metal onto the market?
Well, they can't keep pouring metal on the market forever because eventually they're going to run out of metal. And here I'm talking about governments and central banks. Unless at some point in time in the future, when the vault is empty, they do what Roosevelt did back in 1933 and confiscate gold again and start the whole game all over once again. But, basically what they're trying to do is to make the national currencies, central banks are trying to make the national currencies they manage look better. Because what's actually happening is that they're debasing the currency. They're debasing the currency's purchasing power, and gold's price is rising in response. Gold is the natural competitor to national currencies, and when currencies are losing purchasing power, the gold price will rise. It's just a very basic axiom of monetary finance.
Yeah, no, absolutely. No, please keep going.
Well, I was just going to say that what they do then is central banks do two things to try to keep the gold price from rising. One is that they do an awful lot of propaganda. I mean, how many times over the past several years have we heard about the IMF sales and various other things? Now that the IMF sales have occurred, it's had essentially very little impact on the price of gold, but the propaganda impact was huge. And periodically, they let out a little bit of metal into the market to back up their talk with some physical metal. But physical metal is very precious. metal cannot. So central banks only use that physical metal sparingly, which is sort of interesting again, with the BIS transaction. It appears that the BIS wanted to get its hands on physical metal, perhaps to bail out a bullion bank or bail out some other central bank that had maybe was underwater on a big derivative position, and somebody wanted to use physical metal to cover that derivative position. Again, we just don't know, but there's a lot of opportunities for speculation as to what the BIS and the banks involved were doing.